Good morning, everybody. Juan Torres here, your California trusted mortgage professional. It is Thursday, March 26th, 7:07 a.m. and as you may have already heard, the unemployment numbers are out. And if you remember, if you've been watching these videos, but last week unemployment numbers were roughly at 283,000, and we had expected that the numbers for this week would be at 2.3 million unemployment or new applications for unemployment to be filed today or by this week. Not the case. Actually, U.S. unemployment claims soared to nearly 3.3 amid coronavirus outbreak. Not surprising, right? With everything that's going on, and that's not even counting the people that are self-employed, that can't work. That's not including the people that work under the table, right, that can't work. So this is possibly bigger than what and this is a big deal. And what does this mean to us, to the mortgage business, to you, to interest rates, etc.? Well, we've been experiencing a lot. This is on you. We've been going through a lot of changes, a lot of things happening very, very fast. Interest rates dropping significantly, very fast, and too often. So I'm going to give you a brief rundown of kind of like what's going on with the market, what's going on with rates, and how it's affecting you. All right. And so in this video, we're going to talk about, I'm going to cover 4 different things, okay, on how rates are being impacted. Okay. Number 1, influx of mortgage applications. Let me move this over here because I noticed that I'm kind of like moving my, all right. So influx of mortgage applications, rapid rate of turnover, market uncertainty, and today's numbers. Let's go over number 1, okay? Influx of mortgage applications. So rates have dropped significantly. And so what that's caused that nearly everybody that had a mortgage above 3% to refinance, okay? So that could have been somebody that just refinanced 3, 4, 5 months ago, and they got a rate above 3%, well, they submitted an application to refinance. So what that does is there's an influx that creates an influx of mortgage applications. And according to some numbers that I've seen on a couple of articles and numbers released by some of the professionals that I follow in our industry, in the past 12 months, we've closed approximately $2 trillion in mortgage applications. There's an anticipation, we anticipate that we anticipate to do approximately $5 trillion in mortgage business this year. We have a capacity to close and fund $3 trillion. So what does that mean? There's just so many applications that it's flooding the system. And so what lenders have done is they can't put an ad online and say, hey, we're no longer taking mortgage applications, please stop applying. So what lenders have done is they've raised their rates with the hopes that mortgage applications stop coming in. Number 2, the rapid rate of turnover. So you have to understand that if you bought a house, let's just say a year ago, and your rate was 3.5%, I've got to remind you, that's still a stellar rate. Like, that's a kick butt rate. You're not going to be able to, that is really good, okay? Now, can you get something like that right now? Possibly. It's going to be very, very hard. And if so, considering how crazy the market is, it's going to cost you probably an arm and a leg, okay? So you have to understand that that person that bought that property, or that person that got that mortgage a year ago at a 3.5%, you have to understand that the lender anticipated they collected a certain amount of revenue for the life of a loan. But when you had that one person refinance in less than, I don't know, let's just say in less than 5 years, you have a lot of people losing money, including banks. And when you have an epidemic, right, of that happening, that's a big problem. And so rates or lenders have to incorporate pricing, or they have to incorporate the loss into the pricing. I hope that makes sense. Number three, you have a market uncertainty. This whole coronavirus has really done some damage. So lenders have to also account for that. And last but not least, today's numbers, unemployment numbers. That's an additional layer of risk. And so lenders have to account for that, right? Money they lend out, I mean, you've got to see it. Every single application has a certain level of risk, okay? So the lenders have to incorporate that into their pricing. So not only do you have a couple of things, you have the influx of mortgage applications, you have the rapid rate of turnover, market uncertainty, and then unemployment numbers. It's just, luckily, rates are really low right now, where they're able to incorporate all of that into the rate. But it just when you put the market, when we as loan officers quote these numbers to the consumer, the consumer, I've noticed that some of you are thrown off. You're like, well, hold on. The government just dropped the rate to 0. I was under the impression that my rate was going to be 0. Look, number one, you wouldn't want that to happen. Our banking infrastructure and mortgage infrastructure would collapse. Kind of similar to what happened in Europe. Number two, that would never happen. And then number three, mortgage rates are not at 0%. That's the Fed fund rate. So, and I did a video on that. I'll try to see if I can put the link somewhere here where I talk about that. I'm reasonably new to this stuff. I used to have somebody that would edit and do all this for the team and I. At this point, it's just I'm having to do all this stuff, which, by the way, I'm having some fun with it. But it's got its technical things. So I'm going to be doing a little bit more informational videos on what's going on and how this affects you and what to look out for. And if you have any questions, and if you found this of value, if you like this, please give this video a thumbs up. If you haven't already, please subscribe and reach out. Ask me questions. Look, if you have a mortgage related question, ask the professional. Don't go ask your brother-in-law that bought a house 3-5 years ago and he thinks he knows it all. No, ask a professional. It's like if something's wrong with you, you're not going to ask your brother-in-law. You're going to go to the doctor, right? If you have issues with your car, you're going to go to the mechanic. Now, hey, look, if your brother-in-law is a mechanic, then okay, by all means. Now, also, if your brother-in-law is a mortgage professional, then sure, go to your brother-in-law. But there's a saying in Spanish that goes like, zapatero a sus zapatos. I hope that makes sense. I hope you're well. Remember, wash your hands often. We have this thing at the house where we have the kids wash their hands like every 30 minutes. So it's a hand wash run. Hope you're well. Be good. Thanks for watching. Juan Torres, your California trusted mortgage professional. Have a good day and be safe.